Night falls over Singapore, a city the world trusts to be clean, disciplined, and immune to the chaos surrounding it. But behind the glow of Marina Bay and the immaculate streets that made Singapore a global symbol of order, a different reality has been quietly taking shape. One built on money that should never have entered the country at all. For years, a hidden river of capital linked to Chinese crime networks slipped through the cracks of a system believed to be unbreakable. Expensive villas, luxury supercars, and private banking accounts stacked with unexplained wealth blended into the landscape as if they belonged there. And almost no one asked where the money truly came from. That facade shattered the moment authorities uncovered a laundering operation worth over $3 billion, connected not to local syndicates, but to an organized group of foreign nationals who arrived with polished identities, flawless documentation, and stories designed to survive even the strictest checks. What unfolded next forced Singapore to confront a truth it had long avoided, that even the most secure financial hub in Asia can become a playground for the world's most sophisticated underground empires, when scrutiny fails and confidence becomes complacency. This is the story of how one of the safest cities on Earth exposed a network it never wanted to believe existed. A story of 10 men from Fujian, of fake citizenships, of online gambling empires, and of a system that was supposed to stop them, but didn't. And it begins on a night when Singapore suddenly realized that its greatest strength had quietly become its greatest blind spot. It starts on a humid August evening in Singapore, just hours after the city's skyline glows into its usual symphony of white and gold. But beneath that polished calm, something is out of place. Unmarked police convoys slip through the tree-lined streets of Bukit Timah, ease past the private docks of Sentosa Cove, and crawl along the luxury corridors near Orchard Road. These are not routine patrols. These are silent formations, moving with a precision that signals the beginning of a coordinated strike, and when officers emerge from the vehicles, their presence shifts the entire atmosphere of the night. One by one, gates swing open to reveal garages stacked with Lamborghinis, Ferraris, and Rolls-Royces, their license plates registered to names that don't match the financial trails behind them. Inside the homes, investigators find something even more telling. Hidden vaults packed with cash, rows of gold bars, rare watches worth more than small apartments, and documents pointing to accounts across multiple jurisdictions. What looks at first like the spoils of extraordinary success quickly begins to resemble something far more troubling. A network built on money, whose origins could not survive the light of day. As teams sweep through the properties, a pattern forms. Every address, whether a glass-walled mansion or a high-rise penthouse, belongs to individuals who arrived in Singapore with impeccable paperwork, impressive investment stories, and a level of wealth that could easily pass for genuine prosperity. Yet, as officers restrain millions in bank accounts and seize assets that will eventually push past $3 billion, a new question takes hold. How did this much suspicious capital settle quietly inside one of the world's most tightly regulated financial systems? For decades, Singapore has sold itself as the gold standard of financial transparency, a place where compliance is strict and illicit money rarely finds oxygen. The world believed it. Singapore believed it. Even the criminals believed it, which is precisely why they came. 10 men, all born in Fujian, managed to construct a life here that blended seamlessly into the architecture of global wealth. They obtained foreign citizenships, registered corporate structures that looked sophisticated from the outside, and purchased assets that symbolized legitimacy in the eyes of banks and regulators. By the time authorities connected the dots, they weren't just tenants in luxury districts. They had become fixtures in them. Their presence was a reminder that in a world of accelerating capital flows, even the strongest filters can be bypassed when identity, money, and paperwork are engineered with enough precision. As the final vehicles are hauled away and investigators gather evidence into sealed containers, It becomes clear that the night's operation is not an isolated enforcement action. It is the moment Singapore realizes its armor has a crack that was invisible until now, and one that raises a larger, more unsettling truth. If billions in criminal proceeds could nestle so comfortably into this city, what else has already slipped through unnoticed? By the time investigators finish securing the last property, the focus shifts from the luxury they've seized to the people behind it. And this is where the real story begins. The 10 men sitting silently in interrogation rooms are not typical offenders trying to outrun local law enforcement. They are individuals who engineered their lives with such precision that even seasoned financial crime analysts are struck by the level of planning. Although every one of them was born in Fujian, none of their passports say China. Instead, officers are handed documents from Cyprus, Vanuatu, Dominica, Cambodia, and a handful of other nations that offer citizenship through investment programs. It is the first clue that this group did not simply bring money into Singapore. They brought identities designed to pass through any gate without raising suspicion. This passport washing strategy is more than a clever loophole. It is the foundation that allowed billions to blend seamlessly into the city's financial bloodstream. With new nationalities, they approached banks not as Chinese nationals moving questionable offshore funds, but as international investors with diversified portfolios. In Singapore's competitive wealth management industry, where private bankers fiercely pursue high net worth clients, their arrival was not unusual. It was welcomed. Their paperwork looked flawless. Their stories were polished. Their wealth appeared consistent with the narratives they crafted. Overseas entertainment ventures, cross-border consulting, technology investments. And so, accounts were opened, assets were purchased, and their presence slowly merged into the fabric of Singapore's elite neighborhoods. But investigators quickly discover that behind the polished facades, none of the supposed businesses these men claimed to run made any economic sense. Corporate registries reveal companies with no employees, no offices, and no identifiable clients. Financial statements show no operational activity. Instead, the digital evidence extracted from seized laptops and phones exposes a very different ecosystem. One built around online gambling networks, cross-border loan operations, and scam platforms designed to target Chinese-speaking victims across Southeast Asia. The revenue flowing through these structures didn't come from legitimate commerce. It came from thousands of individuals in mainland China, Malaysia, Thailand, and beyond, who were deceived into sending their savings into websites that were never meant to pay out a single cent. Once the money entered these offshore networks, it began a journey engineered to erase its origins. Funds would move from a scam operation in Phnom Penh into a payment processor in Manila, then jump into a cryptocurrency wallet, and eventually land inside a shell company incorporated in Hong Kong or Singapore. The goal wasn't just to hide the money, it was to make it look like it had nothing to do with crime at all. And because these 10 men held non-Chinese citizenships, the transfers resembled international capital movements, rather than a river of illicit proceeds fleeing law enforcement crackdowns. What shocks investigators most is not the complexity of the scheme, but its simplicity once the layers are peeled away. These men thrived in Singapore because they understood something fundamental. The global financial system does not scrutinize wealth equally. With the right passport, the right story, and the right banking contacts, capital can move freely while its victims remain invisible. And as investigators map out their networks, one realization becomes unavoidable. The billions frozen in Singapore are not the product of isolated operations, but the visible tip of a much larger engine still running elsewhere. Once investigators understand who these men truly are, the next question becomes unavoidable. Where did all this money actually come from? The answer forces them to look far beyond the polished neighborhoods of Singapore and toward a different reality unfolding across Southeast Asia. A fragmented landscape where weak oversight, political connections, and digital exploitation created fertile ground for a new generation of transnational financial crime. The trail leads first to the Philippines, where Chinese-linked operators built sprawling online gambling hubs that catered almost exclusively to players inside mainland China. When Beijing outlawed most forms of online betting, these operators didn't shut down. They simply relocated. From the bright lights of Manila, investigators follow the threads into the darker corners of Cambodia and Myanmar, where entire compounds operated like industrial zones of deception. These weren't makeshift operations run from apartments. They were fortified complexes with dormitories, armed guards, and floor after floor filled with workers forced to operate phones and computers for up to 12 hours a day, generating scripts, baiting victims, and funneling money into carefully designed fraud systems. The victims came from everywhere: China, Malaysia, Taiwan, Singapore, even parts of Europe. And the scam formats varied from fake investment schemes to fraudulent loan offers and manipulated betting platforms. But the underlying mechanics were always the same: lure, extract, disappear. And the profits these networks produced were staggering. Every time a victim wired money into a platform, that money was routed instantly through an intricate digital maze. Crypto wallets acted as temporary holding tanks. Underground banks, especially those linked to the Fujian networks, converted the funds into stablecoins or cash. Then, the money jumped across borders, often passing through Hong Kong, Bangkok, or Dubai, accumulating layers of insulation with each transfer. By the time it reached a corporate account in Singapore, the original crime was buried under thousands of transactions, false invoices, and shell company paperwork. But what truly shocks investigators is not the technical sophistication. It's how openly many parts of the system operated. In Sihanoukville, for example, entire districts were dominated by compounds funded by Chinese investors, operating under the protection of local elites who profited from the influx of capital. In certain regions of Myanmar, these scam syndicates were powerful enough to negotiate directly with local authorities, building private mini-states dedicated to digital fraud. These were not fringe groups hiding in remote forests. They were structured organizations with hundreds of workers, professional managers, and financial officers responsible for moving millions every week. For the 10 men in Singapore, these overseas operations function like factories. The workers in Cambodia and Myanmar produce the revenue. The intermediaries in the Philippines and Hong Kong handled the processing. And Singapore served as the final conversion point, the place where illicit wealth shed its criminal past and re-emerged as legitimate assets. To outsiders, these men looked like global entrepreneurs. In truth, they were the final beneficiaries of a machine that exploited thousands while using cross-border financial loopholes to stay one step ahead of regulators. As investigators map this ecosystem, a grim pattern becomes clear. The money didn't simply pass through Southeast Asia, it was manufactured there. And Singapore, despite its reputation for strict compliance, had unknowingly become the final stop in a chain that stretched from cyber compounds in Cambodia to luxury real estate in one of the world's most admired financial capitals. For the first time, the city must confront the uncomfortable reality that its openness to global wealth also made it vulnerable to global exploitation. As investigators trace the money from the scam compounds of Cambodia and Myanmar to the polished towers of Singapore, a deeper, far more unsettling truth emerges. The laundering didn't succeed because criminals were brilliant. It succeeded because Singapore's own financial architecture provided the perfect final stage of the process. The city's reputation for stability, low corruption, and rigorous oversight created an illusion that anything arriving with the correct paperwork must be legitimate. And the 10 men from Fujian understood that better than anyone. They didn't try to force their way through regulatory barriers. They engineered their identities, companies, and transactions to glide through the system with minimal resistance. The first step in their strategy was identity washing. By entering the country with passports from Cyprus, Dominica, and Vanuatu, they bypassed the intense scrutiny typically applied to wealthy individuals from mainland China. These passports weren't just travel documents. They were credibility shields, allowing them to walk into banks and family office service providers as international investors, rather than politically exposed nationals from a region notorious for capital flight. From there, they deployed what investigators now call corporate fog. Dozens of shell companies with impressive but ambiguous names, trading firms, consulting companies, technology groups, were registered across Singapore. On paper, these entities looked like the building blocks of diversified international portfolios. In reality, not one of them had meaningful activity. No revenue, no staff, no operations. Their sole function was to absorb incoming transfers from overseas intermediaries and reclassify them as business income or investment gains. Because these businesses existed in a jurisdiction known for transparency, even thin corporate filings carried an air of legitimacy. And since shell companies are legal in Singapore, as long as they meet reporting requirements, no law was technically broken at this stage, which made the scheme even harder to detect. But the most revealing part of the operation was the role played by certain individuals inside the private banking sector. Singapore's financial system is built on the belief that compliance and wealth management operate in parallel, but in practice, high net worth banking is often driven by competition. Wealth managers fight aggressively for clients with the large balances, and when a foreign investor arrives with millions ready to place into deposits, property acquisitions, or investment products, the incentives skew dangerously. Investigators discover that some bankers overlooked inconsistencies in documents, brushed aside anomalies in transaction flows, and even coached clients on how to describe their wealth to satisfy regulatory checkpoints. It wasn't widespread corruption. It was complacency fueled by the pursuit of lucrative accounts. The very people who were supposed to question the narrative instead helped refine it. Once inside the system, the final step was asset conversion. Funds that originated from forced labor in scam centers or illegal betting rings were transformed into condos overlooking Marina Bay, supercars parked under Sentosa Cove villas, luxury watches, and structured investment portfolios. These purchases did more than obscure the origins of the money. They legitimized it. Once capital is stored in real estate or diversified into financial products, its past becomes nearly impossible to track. And because Singapore prides itself on being a magnet for global wealth, these men blended seamlessly into the broader ecosystem of foreign investors who arrive with large sums and vague stories. By the time authorities launched their crackdown, the laundering machine had already embedded itself into some of the most respected layers of the financial system. And the realization hits hard. The criminals didn't compromise Singapore's defenses. They exploited the very confidence those defenses were built on. As Singapore's investigators finished dismantling the network and freezing more than $3 billion in assets, the shockwaves ripple far beyond the island's borders. What initially appeared to be a localized money laundering case quickly transforms into a regional alarm bell, exposing the uncomfortable truth that Southeast Asia has become a crucial corridor for Chinese gray money, capital that slips between legality and criminality with extraordinary ease. And for nations across ASEAN, the message is impossible to ignore. If a country as disciplined and technologically advanced as Singapore can be infiltrated this deeply, what does that mean for places with weaker institutions? The concern grows not just because of the dollar amount seized, but because the case reveals something systemic, a machine capable of shifting across borders, adapting instantly, and embedding itself into financial ecosystems that believe they are immune. Governments in Malaysia, Thailand, and the Philippines quietly begin reassessing their exposure. Officials in Cambodia and Myanmar, where many scam compounds operated with tacit approval from local elites, now face renewed scrutiny from international partners. Even regulators in Europe and the United States take notice, warning that illicit Chinese capital flowing through Southeast Asia could eventually reach global markets, hidden behind layers of shell companies and offshore entities. The concern isn't abstract. It's rooted in a clear pattern. Whenever Beijing cracks down on financial misconduct within China, the money doesn't stop. It migrates, first to Cambodia, then to Myanmar, then to Singapore. And if Singapore tightens the system further, the next stop could be Vietnam, Laos, the UAE, or even Western financial centers open to inbound investment. For Singapore, the moral dilemma becomes sharper. The city relies heavily on foreign capital, including significant inflows from wealthy Chinese nationals, seeking security, stable banking, and long-term residency. Rejecting opaque capital risks, slowing growth in real estate, private banking, and investment services, sectors that contribute significantly to the national economy. But accepting it blindly threatens the credibility Singapore has spent decades building. The government now walks a tightrope, reaffirming that clean money from anywhere is welcome, while proving that dirty money, even when wrapped in perfect documentation, will be relentlessly exposed. It's a delicate balance, and the world is watching closely to see whether Singapore's response becomes a model or a cautionary tale. Yet the deepest irony circles back to Beijing. China publicly praises Singapore for its governance model and strict enforcement. But much of the criminal capital uncovered originates from systems of corruption, tolerated online betting, and underground banking within China itself. These ecosystems didn't arise spontaneously in Cambodia or Myanmar. They were exported. And until the underlying drivers inside China are addressed, the region will continue to absorb the consequences. Every scam compound that rises in Sihanoukville, every illegal casino server hosted in the Philippines, every money laundering hub uncovered in Singapore traces its roots to gaps inside China's own institutional structure, gaps that Beijing often prefers not to acknowledge. As the dust settles, Singapore's operation stands as both a triumph and a warning. It demonstrates that determined enforcement can tear down a laundering empire no matter how carefully it is constructed. But it also exposes a far more troubling reality. The pipeline feeding these operations is still intact. The same victims continue to be exploited. The same operators remain active. And the same money keeps searching for new territories willing, or unprepared, to receive it. In the end, the question that hangs over the region is not whether Singapore can stop the next wave of illicit capital. It's whether Asia is willing to confront the growing influence of gray Chinese money at its source, or whether it will continue cleaning up messes it didn't create until the next billion-dollar storm arrives. In the wake of this massive operation, one truth stands unshaken. Singapore's $3 billion crackdown is not the end of a story. It is a beginning. It is a reminder that no financial hub, no matter how sophisticated, can remain untouched in a world where illicit capital moves faster than oversight can react. And as regulators across Asia, Europe, and the United States now study the lessons from this case, a larger question rises to the surface. What happens when the next wave of gray money arrives, cleaner, faster, and harder to detect than the one before it? Singapore exposed the machinery this time, but the same networks are still adapting, still shifting, still searching for their next safe harbor. The victims across the region, from families in mainland China losing savings to workers trapped in scam compounds, continue to pay the price while the architects behind these empires remain several steps removed from accountability. What this case ultimately leaves us with is a choice. Nations can either strengthen their defenses, demand transparency, and work together to push back against the influence of illicit capital, or they can ignore the warning and allow the next generation of financial crime to embed itself even deeper. Because as long as billions in unregulated money continue to flow across borders disguised as investment, stability itself becomes vulnerable. And the question for every government, every regulator, and every citizen becomes clear. Who will control the future of Southeast Asia's financial landscape? The institutions sworn to protect it, or the networks determined to exploit it? If you want to understand how these hidden systems grow, how they infiltrate legitimate economies, and how they could reshape the region's future, stay with us. The story doesn't end here, and what comes next may be even more important.